How are you doing everyone? Stranger Things back again with another investing video. Today's topic is something I've been wanting to address for a very long time, but it just took me a great deal of time and effort to really sit down and think about how to package this info in a very digestible manner. But I assure you, if you internalize this info, you are going to become a much better investor after this video. So as a self-professed YouTube junkie, I have been noticing this regularly. Flocks of YouTubers repeating the same messages, repeating the same investing ideas, just packaged in different ways. Bruh. And chances are, if you are watching this video, you know exactly what I'm talking about. The YouTube algorithm recommends you to watch videos based on what you are interested in. So if you watch a video, for example, on Palantir stocks, you end up with several other videos discussing Palantir stocks. Now, there may be nuggets of wisdom in each presenter's interpretation and value adding via their opinions, but I think this begets a very important warning when it comes to stock investing advice. Many people singing the same tune about a particular stock may lead us to believe that multiple people all have the same bullish or bearish opinion about a stock. Disclaimer, I say bullish or bearish, but majority of videos are always talking about upside because of few reasons in my opinion. Number one, human psychology. People are more drawn to upside than downside. Number two, statistical probability. We all know in the long term, most stocks trend upwards. What's more, in this very optimistic current market, so if the video gets launched for long enough, the creator can flaunt or boast that their picks have succeeded. I think that it will be more impressive if someone can actually predict a stock's downward movement or lack of upside, rather than a lot of hype and pump on upward movement to the moon. And don't pick those blue chips in declining industries. Pick on some IPOs or specs. That will really be a true test of credibility. And this also applies to due diligence posts on Reddit. It's always about upside potential, but I guess those who warn about downside won't end up at the top page, or they get booed on like Citron Research. Now, I have my own opinion about short sellers, but that's a video for another time. So back to the main topic, my advice is not to leave it to the algorithm when doing your own research. Let's use a personal example. Say I am bullish on Tesla's long-term potential. I still cannot deny that it is a contentious company which has many divided opinions. Instead of soaking in all the bullish feedback like a sponge, actively try to seek out videos, articles of investors presenting the flip side. Oh, and by the way, I read about 80% bearish articles on Tesla and probably only 20% of attention I spend on current affairs related to the stock. Now, positioning yourself as a contrarian investor has its advantages. You look where most people are not looking and find all these golden geese before the mainstream media discovers them. And also, you know when to leave that crowded theater even before the show has concluded, if it happens. Now, I'm not sure if my analogies make any sense, but as a wise person once said, focus on the downside and the upside will take care of itself. I'm also going to be linking a brilliant video from the Swedish investor somewhere around this video. It's about taking stock tips from YouTube gurus, and it has a great deal of overlapping content from what I'm mentioning in this video, so do check that video out too if you're interested. But the long story short from that video is that anyone who has a good investing idea or good investing deal shouldn't be pitching it to you unless A, they are trading for the short term, which in this case means they are trying to run a pump and dump, or B, they have no idea what they are doing as long-term investors. A true long-term investor would want to keep stock prices depressed where possible for a company they wish to invest in, because that would give them more opportunities to add to their positions at a discount to the company's intrinsic value. Therefore, I agree that everything about promoting a bargain stock on a YouTube channel is counterintuitive. I might get some massive flack for what I just said, I know, but before clicking away from this video, just pause, breathe, and try to replay the last minute to make sense of what I said. After all, when it comes to your own hard-earned money, a little skepticism goes a very long way. So anyway, that wraps up this short video / rant. I hope my sharing offers some clairvoyance to you, and this is the style of video I'm working towards. Not specifically talking about stocks, but more on the non-tangible aspects of investing. I really think that investing philosophy is one of the most important determinants of good long-term investment returns, and it's something that I like sharing about. Now, naturally, such videos don't get much traction, so if you enjoy this kind of sharing, do please remember to share your feedback in the comments below and like this video so we can have a more woke investing community. Till the next time, keep learning.